We found one. We found one, folks. In an age of non-playable characters, we found a playable one. Boy, are we lucky. John Haar is from the East Coast and previously spent 13 years on Wall Street, where he was a portfolio manager and institutional investor at Goldman Sachs. He decided he wanted to make a big change in life, and I congratulate him for that. A change that the normie NPC just shakes their head at and cannot believe someone would even consider. John made the jump from traditional finance to the Bitcoin space because of a deep pull inside that he was called to do and serve more. John is currently the managing director of private client services at Swan Bitcoin, one of the preeminent Bitcoin companies in the world with a leading education and the ability to buy Bitcoin in numerous ways. Now let us dive in and explore John's story and the bright orange mission he's on in part 1 of the Haar series. Let's go. John Haar, thank you for joining me today. We're going to deep dive into some fun stuff. So thank you for joining me here today. John, I appreciate it.
Of course, Brandon. Good to be here, man. Pumped to chat with you a little bit.
Good. So John is really quick. John's the managing director of private client services at Swan Bitcoin. He previously spent 13 years on Wall Street, where he was a portfolio manager and institutional investor at Goldman Sachs, which we'll dive into a little bit today, kind of go into John's story a little bit here in part 1. We've already talked about just offline, kind of getting the story a little bit today, getting a brief overview of things, and then we'll deep dive into some other stuff, which I was telling you here, like I love your article that you wrote up, was almost 2 months ago now. I'm sure you're writing it 2 months ago, and it got published in early January. So 30-minute read, but I think it's truly the best, one of the best articles for anyone to read, because before I go down any tangents, again, we get a lot of, like, in the Bitcoin community, you get a lot of, like, the technology or this and that, but it just goes over so many people's heads. But I love what you talk about in here, because it's really the essence of, again, what is money, and something that people are using on a day-to-day basis. So I will touch on that a little bit and getting your story a little bit. So please share a little bit of your background, where you grew up, and tell everyone kind of what led you down this path to being at Wall Street, and then being in Bitcoin, and where you are now.
Yeah, for sure. One of my favorite stories to tell. I'll do the short-ish version, but we can dig in wherever you want there. So I grew up in the New York area, went to college at Villanova University outside of Philadelphia. I was a finance major. Probably the big thing to mention there is I graduated, my senior year was 0809. And if you remember what was going on in the world of finance at that time, not the best time to graduate as a finance major, really as any major, as the financial system was just imploding right before our eyes. And I would say that kind of started my Bitcoin journey, even though I had no idea what Bitcoin was. Obviously, it was just being developed and released around that time. I didn't even hear of Bitcoin until 4 or 5 years after that. But the financial crisis had a huge impact on me. I was a finance major, kind of looking around at the time. My teachers couldn't really explain what was going on. I can remember distinctly watching people like Ben Bernanke, Hank Paulson on TV, not really having a grip of what was going on. Bernanke in particular, just because he made so many comments, we're talking like a dozen or more comments that guy made that ended up being proven wrong, whether it was like, a few months later. Sometimes he made a comment that was proven wrong like 10 days later. And I don't even mean to rip on him too much, as if like, oh, I could have saw all this coming. But it was eye-opening for me, because I was, a 20-year-old kid at the time, and he was the Princeton PhD chairman of the Federal Reserve. He's the one who's tasked with seeing this stuff ahead of time. So my thought was, okay, if that guy who's in charge of this monetary system we have is not able to see the biggest financial crisis since the Great Depression, then, what is going on in this system here? Something's kind of wrong here. And it was that kind of realization that made me look elsewhere. And I ended up somehow finding the Mises Institute and Austrian economics. So between 08, 9, 10, 11, and on, I consumed so much content from Mises.org. That's the website for the Mises Institute. And that's after Ludwig von Mises, one of the great Austrian economists, for anyone who is unfamiliar with that name. And I just consumed so much content. They have tons of PDF books that are available from these Austrian economists. They have the classics. They even have shorter articles, which I think is fantastic because not everyone's just going to immediately start reading a 200 to 300 page book written by an Austrian economist from 100 years ago, even if the book is fantastic. So tons of resources there. I just consumed that, nonstop for a few years. That led me to be a proponent of sound money, the gold standard, and Austrian economics in general. And one amazing thing about that, as I'm reading all this stuff, is I never heard the term sound money once when I was in college. And I was a finance major. So I'm taking tons of finance classes, tons of economics classes. I maybe heard something about the gold standard, but never an explanation of why gold became money in the first place. Never a discussion of the history of money, the fundamentals of money. So that was kind of eye-opening to me. I was like, why am I hearing this stuff for the first time? I went to a allegedly good school in the US, and I was a finance major taking economics classes, and I have never heard of any of this. So that was another eye-opening thing for me. So I became a proponent of the gold standard and sound money. But another interesting thing was, as I'm working at Goldman Sachs, where I worked from 2009 until 2022, you have these conversations with people. It's not the focus of your job, but you talk about the monetary system, about economics with people. And if I ever mentioned that I thought the gold standard made more sense than the current fiat system we had, and by the way, fiat wasn't even, you wouldn't even have used that word because no one, if you said the fiat standard, they would have been like, what are you talking about? But so if I said the gold standard makes more sense than the system we have today, they did look at me like, you're crazy. We are enlightened. We've moved beyond the gold standard. And really the only time I can recall the gold standard being referenced in my education was like a passing comment where they would say something like, well, we all know the gold standard exacerbated the Great Depression because these, inelastic monetary systems lead to people hoarding money, and they lead to depressions, and you never get out of the depression because there's not enough money, something like that. Which I think is just a really, really poor and shallow and flawed analysis. But that was kind of it. And as I looked into what the Austrians had to say, I was like, man, this makes way more sense. Gold and precious metals in general have this like hundreds, if not thousands of years of history. I mean, it is thousands of years of history. The Romans were using gold coins. And that made more sense to me. So fast forwarding a little bit, you get to me hearing about Bitcoin for the first time from a friend in 2013. And I'm immediately attracted to the idea of sound money. But my next thought was, this will never, ever catch on, because I'm talking to people about gold and they're looking at me like I'm crazy. Gold has this long history of being money. If you can't convince people that gold makes sense, you're never going to convince them that the magic internet version of gold makes sense. So unfortunately, I immediately dismissed it like many people do. And it wasn't until another 4 years later, 2017.
Hey, really quick, I want to annoy the hell out of you with a quick little break to just remind you that we have to share the signal within the noise, because the algorithms hate truth. The algorithm hates truth. So we have to do all that we can to spread the signal. The faster we do that, the quicker change comes to the world. We need to be the change we seek to be. What are we doing? What am I doing? What are you doing to build a future? Also, if you want a written version of a lot of what we do here, please go to the description and find the link to our blog, our Substack, as well as you will see many links to either the work or the companies, the places you can find all the playable characters here that we talk to and how you can connect with them. So now back to the show. Thank you.
When what I think was the first mainstream bull market in Bitcoin came around. And that was eye-opening for me, because Bitcoin is finally being talked about on CNBC, on Bloomberg. We're talking about it on my floor at Goldman. So I said, okay, maybe this is now an idea that's in the public's eye and it's not going to leave at this point. So that's when I became, more on board with the idea that Bitcoin was perhaps an idea that wasn't going to leave. But even then, there were still so many issues like the whole fork wars and Bitcoin Cash, and I can still remember being confused by that and unsure of how it was going to end. But that's kind of my Bitcoin story going back. And then just fast forwarding to today. So, you probably get a sense of, I've been into sound money for a long time, been into Bitcoin since 2017. And then, but it wasn't clear, like, where would a person like myself go to potentially work? Because I'm not a developer, don't have a software coding background. I'm not going to build something. And in 2017, 2018, there weren't many places that it was like, oh, I'll go work there. Coinbase was not really even a thing. And obviously they went a direction, which, I'm very glad that I never worked at Coinbase. But it was very limited. And then long story short, I got in touch with some people at Swan at some point in 2021, really liked what the team was building there. And I thought it made sense to take the leap and leave a place like Goldman Sachs, the kind of large asset manager, where I don't really like where those types of firms are headed. We can talk about that. That's kind of another story. But so yeah, wrapping all that up, I ended up joining Swan at the beginning of 2022 as part of their Swan private team, where we try to help people on the whole journey of them learning about Bitcoin. It could be from day one of them saying, hey, I just heard about Bitcoin. Can you help me learn some more? To, hey, I'm trying to take self-custody of my Bitcoin in the smartest way possible, and we'll help them with everything in between. So that's kind of my story in a nutshell, but would love to dig into anything as you see fit.
Yeah, thanks, John. No, I appreciate you running through that. You hit, a bunch of my, as it beautifully said, you hit a bunch of my like opening questions actually. So I was like rearranging my notes. Going back really quick, even to like early childhood, we were talking about hockey growing up and stuff like that, and a lot of commonalities. We graduated at the same time, playing hockey growing up. So we're very similar in that way. How did you hear about it as like money as a kid? Like, what were your experiences as a child with money? And you don't have to get super personal necessarily, like what happened in the family, but I think it's very interesting, and that's very fascinating to me. Again, like how people grow up with money, hearing about it, experiences of it as a kid, stuff like that. Because again, you touched on the great financial crisis. That was one of my questions, because we both graduated school at the same time. That was a huge impact on our lives. I know that growing up. So how, even before that, what was that kind of like, or what were the connotations towards money for you growing up? The first, we'll call it, 20 years.
Yeah, I love the question, because I feel like that one doesn't get talked about as much, but it definitely shapes us. Like, what did we learn about money when we were younger kids? What were our kind of unconscious assumptions about money? The things that come to mind for me, piggy banks were still a thing when I was a kid. I don't know if they are today anymore, but like the concept of actually putting money and saving it somewhere was still not a completely foreign concept when I was a kid. Now I feel like it's almost laughable to, save a little bit of coin, because people are just like, that's, you're never going to get anywhere by doing that. But yeah, the concept of saving was still alive and well when I was a kid. Another one is that I can remember doing a school project. It was, third or fourth grade probably. And the book was on money. And it even had the word inflation somewhere in like the title or the subtitle. And what I remember about doing that book report was that I did not understand it. This is how it sits in my memory. Like, I was always a pretty good student in school, but I can remember doing this book report. What I was going to say is, because I was a decent student in school, I usually had a sense of like, okay, I grasped that concept or I didn't. And I could still remember doing this book report on money and inflation. And I was just like, I don't understand what I just, put together here. But I was like, 10, 11, maybe 12 years old, somewhere around there. I wasn't like deeply thinking about it. I just remember kind of putting it away like, okay, I did the book report, but like, I don't really grasp what was going on there. Another one was, this is now the first year of college, Ben Franklin's autobiography, which is like a classic book that, at least when I was in college, a lot of people had to read it. And there was a section in there where Ben Franklin talks about the money that was circulating throughout the colonies in America. And he made some comment about there needing to be more money. Not in the sense of like funding, like, we needed to move money from here to there. He was literally like, we need more units of money. And I remember thinking, I was like, well, that's interesting. Like, what would make you need more units of money? And at what point are you just trying to make money grow on trees? That was another thing. As a kid, people used to
Wow.
say money doesn't grow on trees, right? That was like a normal thing.
Yep.
Uh,
Very
Now,
middle class, right? Like that was the middle
yeah.
class. So many people heard that.
Yeah, yeah. And fast forward a few decades and it's like there's some entities in our country who act as if money does grow on trees. But Ben Franklin had that line and he was like, yeah, I was of the belief that the colonies needed more physical units of money. And I just remember thinking, how could you even come to that conclusion? What would be the right amount? Beyond someone just saying, hey, everyone wants more units of money for themselves, but how would you come to the conclusion that the system as a whole needed more units of money? But again, I was a 20-year-old kid in college. It was just like one small part of his book. And I kind of put it aside and I was just like, I don't really know, but that's an interesting question. And then it wasn't until like late college, after college, reading some of that Austrian economics stuff where I remember saying to myself, oh, this is how you might determine if the system needs more money or, what's the right amount of money in the system. And I can literally remember going back to the Ben Franklin book and saying, okay, now this kind of makes sense to me. But anyway, yeah, to answer your question, those are some of the things that pop out in my mind about things I had heard or read about money and inflation when I was younger, not really feeling like I had a good sense of it. And none of it really started to make sense until I started reading about these Austrian economics concepts. And then Bitcoin obviously is built on some of these Austrian economics concepts. You could read some of Satoshi's writing, like it's clearly in touch with some of the things that the Austrians had to say. So yeah, those are some of the things that jump out for me from when I was a kid related to money.
Did you have, and I feel like this is a very common thing, especially like, I don't know what it is, the 80s, 90s, I'm sure it was for a while, right? But like savings bonds, like you'd get savings bonds from like your family or, your grandma would give you a savings bonds or something like that. And I remember I just sold a few of them that I had when I was a kid, like a couple of years ago when it was like, the yields were, all time low basically. So the bonds were all time highs. And I remember like, I'm getting rid of these. And I was just like, but I didn't know what they were. I didn't know I had them until like I think like 5 or 10 years ago. And then I just remember selling them and just finally because I was finally understanding the bond market, 5 years, 6 years ago, whatever it was. But going back to because that's part of my story too. Again, like the GFC, we have very similar stories. And again, you mentioned that was one of my questions too. Like, what was uh going back in thank you for answering the more personal like the kid stuff. I think that is fascinating, and that's one of my I don't know the word necessarily, but that's one of my things that's close to my heart is the kids realm, having children that are 6'4", 2 newborn, and just seeing like the lack of education out there and like the just very little what we were taught in school. Again, unless you're the 1% of 1%, you understood the system. You're teaching your kids generally. Some of them are teaching how the system works, but so few people know. Obviously, government-run schools aren't doing that. That's a different rabbit hole for a different day as to why they're not doing it. But that I think is kind of the crux of a lot of problems, and that's Bitcoiners I think are the ones to take on that challenge is because we think very long term, very low time preference, very long term. And yeah, it's not going to be like a simple, 3-day fix or a couple week or a couple month fix. It's a generational fix. Like we have to fix the rewiring of our brains and what money is. That's why I love your article again of what is money, getting into it, and really from like a layman's terms, really like the base level, because everything else kind of springs from that. So again, I'll link that in here. We probably won't touch on that too much today. Probably in part 2 of the series, we'll talk more about really get into depth in that article, like what is money and all that. But the GFC itself, what was like the aha moments for you? Because I know what mine were, but what were some of the aha moments in the GFC for you? And again, Bitcoiners are built in layers too. I believe it's funny because like a lot of people, Bitcoiners like, oh, you're just chasing fiat, you're just chasing more fiat, whatever it is, your moon boys and this and that. But it's funny because you just outlined what I think is the story, and this is why the stories are so important from the kids all the way on up, because you went through the whole thing of school or kid being a kid, your experience there, then school, then experience in the GFC, and getting into Mises, and then Wall Street, and then to Swan, and Bitcoin finally. Like it's built in layers, and that's what most people just think like it just happens like overnight. Like, oh, I'm a genius, and I just figured out Bitcoin immediately. It's like, no, we've been through this war, and you just went through this whole war in your life, basically, of like going through this attrition, and you're built in layers, and we're all built in layers. That's how you finally get there. You have to go through that gauntlet, at least in my belief, to get to Bitcoin and finally understand. Oh my gosh, like the Pandora's box opens, you see behind the curtain. So in saying all that, just the GFC, what was that impact, I guess? What were there aha moments or enlightenment to me? Was it Occupy Wall Street? Was it, the Tea Party? Was it the bailouts? Like what were those things for you? Do you remember vividly, 15 years ago?
Yeah, that's another great question. I think one that jumps out to me was the fact that, well, one of the things you mentioned, for sure, the bailouts. As someone who's generally a believer in limited government, that never sat well with me. It was, someone who's generally adverse to hundreds of billions of dollars being spent on almost anything by the federal government, to see it being spent on bailing out banks, and then there being this kind of vague, well, we did it to save the system type of explanation. That definitely never sat well with me. And then over time too, just like the numbers of what it took to bail out those banks. Some of the banks got like 10, 20 billion or something. Now it's like Congress passes a new bill to spend 10, 20 billion somewhere, like that, it's a drop in the bucket. So that's just crazy to see how those numbers have changed over time. Another big realization for me was the first time QE was being passed and explained by people like Ben Bernanke publicly. And I'll never forget. So this is another huge gap in the education system. Maybe it's gotten a little bit better. I doubt it. But when I was in college, there was not an explanation of what the Federal Reserve is or what they do. I'm not trying to say it wasn't talked about at all, but it was just very shallow. It was like,
There were
they
just
manage
textbook definitions. Yeah.
exactly.
Yep.
One paragraph is what you got.
Yep.
And I remember thinking, when Ben Bernanke's talking about quantitative easing, hey, we're going to buy treasuries, we're going to buy some of these toxic mortgage assets off the bank's books. And I remember thinking to myself, where do they get this money to do this from? And my initial thought was that the Federal Reserve must be funded with taxpayer money ahead of time, and then they use that money to purchase these assets. That was what intuitively made sense to me, because I would not have been able to believe that when the Federal Reserve buys an asset, they just use newly created money to buy an asset. That was like unfathomable to me. I was like, there's no way it could work like that. And then I remember, reading articles at the time, hearing Ben Bernanke publicly say, yes, we are creating new money every time we buy an asset, because the Federal Reserve is not this pre-funded entity that has, real money from taxpayers that we use to buy assets. We literally create the money out of thin air to buy these assets. And that's a whole nother
money growing on trees.
Money growing.
You
exactly.
just alluded to this earlier, right? Like this, you just said this earlier.
Exactly. And that's why it was so unfathomable for me. I was like, they can't just be creating money out of thin air, because that kind of violates everything we know, or that I thought we knew about money. So that was a huge light bulb moment for me. And there were some funny videos made at the time of like, I don't know if you remember these, like these videos where they had like voiceovers of these little characters at the time. I should go back and find one, but it was like explaining what happens when Ben Bernanke just like decides to buy an asset and the money gets made out of thin air. And yeah, one, that was enlightening. And two, it was another thing where I said to myself, why didn't anyone in my education system tell me about this? So that stands out to me as one of the biggest light bulb moments, because from there you start asking the question, what is money? Which now, that is the question that Bitcoiners all ask. But for me, that kind of triggered it, because it was like, well, if this entity can just, buy an asset with tens, hundreds of billions of newly created dollars out of thin air, then we need to have a conversation about what money is. Why is it okay for them to do that, but other entities can't? What are the impacts of creating money out of thin air? And these are still the questions that Bitcoiners are tackling and addressing today. still think we have a long way to go because there's huge contingents out there that think, QE was like this magic pill that saved us all. And I think to say the least, there's a lot more to that story.
Yeah, no, it's so well said. And I know people, like, being from Michigan here too, knowing so many people in the auto industry, and there's very, very polarizing, obviously, because some people thought, well, we need to get bailed out and this is our whole state will collapse. And then I know tons of people who lost everything because of the bailouts, and they wiped out, pensions, like, just gone, like their whole life they worked for, it's gone, so like it was just picking winners and losers. That's all it was. And it was just, that was like, to me, the same thing. Like, this is not what I believe. Like, this is not, and one party started and the other came and finished it off. It was like one party led us up to the platform, the other party dropped the floor out, and it was like, that was the eye-opening thing to me, big time. You were right in the kind of, not the thick of it, but like afterward, in a way, you started to go work at Wall Street after you left college. What was that like? I mean, just kind of seeing, not cleaning up the mess necessarily, but like being on the inside in a way, seeing that. Tell me, like, what that was like, and just kind of seeing that, like, going from like, oh my gosh, what's going on, to then like, oh yeah, I'm kind of like in that world of being around that. What was that like?
Yeah, back then when I say like all the kids around my age who started at Goldman at the same time, there's a lot of training programs you go through, a lot of speakers that you sit through where it's a senior person in some part of the firm that comes in and talks to you. We're talking like a class of maybe 100 or so people who were all going into the asset management division of Goldman. They kind of broke you up that way because the reality is, there were other people going into investment banking the same time I was, but they're like completely separate parts of the firm. So you're never going to work with those people. So my analyst class, as we called it, was 100 or so people going into asset management. And I could still remember a lot of those conversations. In more normal times, it all just would have been educating you on how Goldman Sachs works and, what your job's going to be going forward. But because it was in July 2009 when we all started, a lot of it also was kind of like a post-mortem on the financial crisis. It was like, hey, here's what it was like working at Goldman Sachs for the last 12 months, because it was one of the craziest times in financial history. And I remember there was a ton of falling in line with basically the one view, which was we were headed for financial Armageddon and the Fed saved us from it. Fed plus Treasury, TARP and the bailouts. And it was not like this deep analysis. It was just kind of repeating this narrative of like, it wasn't great that these banks got bailed out and the Fed's doing QE, but it was definitely the best choice. And they saved us from something worse. That was like, you kind of had to fall in line with that way of thinking. And because I had already started reading stuff from the Mises Institute when I was a senior in college,
Yeah.
I was already not
Didn't
on
jive.
board. I was already like, man, I don't see the logic there. But I will say I wasn't many years into it. So I wasn't like a hardcore Austrian economics like now. I'll put it this way. Now I feel much more confident. I've read so much more. Years have gone by. I feel like I've heard counter arguments. So I would take a stand against someone who's coming with that narrative of the Fed and Treasury saved us all. Back then, I was kind of like, okay, these people are saying this. Again, I'm like 22 years old. So these people who've worked on Wall Street for literally longer than I've been alive, you had like 25-year
How
veterans.
can you argue with them?
Yeah. I'm not going to argue with them. One, because I'm trying to be humble. I'm saying they have 25 years of experience. Maybe they know something I don't know, even though I read this Austrian economics stuff that says otherwise. And then unfortunately, the reality is too, you're a 22-year-old kid who just started at a firm like Goldman Sachs. Even if I did feel that I had something that I could counter them with, it doesn't feel great to say it, but am I really going to raise my hand in that room of 100 people and be like, hey, no, actually, this doesn't make sense. Unfortunately, the like risk reward there was not very good. So that's kind of some of the stuff I recall from starting out. It was like, this kind of one narrative was acceptable about how you viewed economics and the monetary system. And quite frankly, I don't think that much has changed, like maybe a little bit on Wall Street. There are some people on Wall Street who I think are willing to say like, hey, maybe the Fed has gone a little too wild with these QE programs and interest rate manipulation, maybe a little bit. But generally speaking, it's still like that. You don't speak against the Fed
Yeah.
mentality. And I could get
Don't
into
kill the golden
more.
goose.
Yeah, don't
Yep.
kill the golden goose. I could get into more
Yep.
about how the investment banking divisions at Goldman or any bank or asset management, they thrive from these policies of low interest rates. The fact that people
Absolutely.
can't save money, you have to invest your money. You think a big asset management firm is going to be upset about that? Low interest rate environment, companies end up doing debt funded M&A, this company buying this company, taking out $1 billion worth of debt. Who do they go to do that? They go to the investment banks
Right.
on Wall Street. You think that they're
IPOs,
gonna
LBOs. Yeah.
exactly
Yep.
like this. It's
Yep.
just the incentives are very much so that these big banks, they're okay with the Federal Reserve policy of the last 15 years. So it's unlikely that they're going to speak out against it.
Yeah, it's so true. And going back, circling back to a couple minutes ago, even like just the children's education. And it's again, I think this is fascinating. Again, having children, seeing this firsthand and thinking about this, ironically, so one of my things coming out of the GFC was just children's education as well, and wanting to start a media company when we were that age, 21 years old, 22 years old, and thinking, wow, we need to change the culture of just like the kids, the young people coming up, because they just like what is money and what you talk about in your article, everything. Sometimes the simplest answer is the best answer, right? And it's we don't even know what money is. So how in the world everyone's like trying to derive these answers, and it's just we're a constant symptom treat the symptom culture where it's like, hey, just throw some pills, band-aids on it, like you guys, you've got cancer, like we need to fix that, and it's like, just throw some pills at them, just throw some band-aids over on them. And that's what's always at the root of so many of our problems is we are never treating the core problem. It's always symptoms. It's always symptoms. Big pharma, whatever, the healthcare industry, everything's so broken because of fiat, and which you kind of touched on as well earlier. But we're not learned taught as a kid. So how do you know? Even as a 22-year-old, like you said, you just found it when you're 22. Same thing with me. I mean, I found it because the GFC is what led me into really figuring it all out and going down the rabbit hole. So it's like, how can you when you're just learning about something when we should have learned about it when we're 5 or 8, or 10? You should have already had 12 years experience. But now we're just learning it. So like, how can I fight someone who's been doing this for 25 years? Because maybe this is wrong. I don't have all the answers, the objections handled. So it's just fascinating to me. And I think that's where the fiat has really broken this, because it enables, like you mentioned earlier, this currency printing. You see it in the GFC, or started, like you said, the quantitative easing really woke you up, and it just enables everyone, as to just, hey, we're going to take it, steal everyone's time and energy, bring it to the government or bring it to whatever the commercial banks, and they get to spread that wealth around, your time and energy, to wherever they want. Put slogans in the end zone. Certain commercials, like they just endlessly beat you over the head with your own time and energy. And that's like the most insidious part of all of it. They get to like be in bed together as public-private partnerships because they've broken that trust, and it's really devolved into what we're seeing now, which is, I think, only the beginning of maybe what's going to happen. So we can get into that, but we have Bitcoin. That's the beauty of it. What transitioning really quick, you can comment on any of that, but so then going to Swan. So like over those next handful of years, seeing this, obviously your core values, like it didn't totally jive, right? Being on Wall Street, and you're like, okay, like you're learning more about Mises, right? Sound money, all these things, learning about Bitcoin more, and then saying, okay, I've got to make a jump here, which most people, again, kudos to you, never would have done. Like you have a position where 99% of people growing up would be like, hey, I would love to work where John is. And then you're like, hey, I got to go do something else. Like I've got something in here is telling me I've got to go. So what did that transition look like? And kind of how they come about, what that look like, and just, talk briefly about Swan too, and what you guys are doing there.
For sure. And I'll just make one comment on some of the awesome things that you just rattled off there. But like this question of what is money, and if we never, and you tied it into children's education, because if we never addressed with people what money is really at any level, right? You're talking children's education. I think it should definitely be there, but like it's not even in college education in most places. So if that's your system, you didn't learn about it as kids, you don't learn about it when you're in college, you don't learn about it on Wall Street. I could speak from all of those firsthand. It's just absent from all of those places. Then it's like, it kind of makes sense that we're so lost in these conversations about what is money, what are the effects of all these Fed policies and government programs. And I just wanted to make one comment about how I think that ends up playing out on Wall Street is this question of what is money is thought to be too basic and simple for someone who made it all the way to Goldman Sachs. You know, Goldman Sachs has this reputation for being this elite financial services firm. And there's some like image things at play here, some ego things at play here. Someone who went to a top university and then, you know, interviewed and got into Goldman Sachs, however they did, they're not likely to admit, oh yeah, you know, I've never considered the question of what is money, especially because you're in the world of finance. True. It's like, you know, the analogy I love, it's like the doctors admitting that they know nothing about nutrition, which unfortunately I think many people have
another
realized.
Can of worms, John. That's another can of worms.
Another can of worms, but
different part, different series.
Yeah, that's
different part in series.
That's part 7.
Exactly. Exactly.
But I think the analogy holds true just because no doctor, like, you know, there's this prestige associated with being a doctor, and to say, hey, actually, I never took the time to understand nutrition is the same as the VP at Goldman Sachs. They're not going to admit, hey, I never took the time to understand the fundamentals and the nature of money. And that's okay. You know, I'm not blaming them, but it's better to admit
system's
that
broken. Yeah,
the system is broken.
Yeah, right.
But we shouldn't be exactly. We shouldn't be looking to those people for the answer, because the problem we've identified here is that they've never spent time considering that. So that's you know, just something that popped into my mind as you were running through that. But the transition from Wall Street to Swan, to talk about that for a little bit. So a few things pop into my mind as I think about that. One is just elaborating on this point that I brought up before, that in like 2017, 2018, there was nothing that was really obvious. It was like, oh, I like Bitcoin and sound money, therefore I'm going to go work, you know, at this firm. There wasn't something that popped up like that. Like I said, Coinbase was around in 2017, 2018. And then there were some of these crypto hedge funds at the time, because there were a bunch of other tokens that existed, and ICOs was a big thing. And just another comment to show how people on Wall Street view things. Over the years, when I would have conversations with people about Bitcoin at Goldman, they would say to me something like, oh, I know a guy who works at a crypto hedge fund. You should go talk to him. And I thought it was so interesting, because they view everything as like an asset on a screen, and you just trade the ups and downs of the chart. And the analogy that I've now thought of is I'm this guy who's passionate and fascinated by the nature of money, and they're telling me to just go trade the ups and downs of a chart. It would be like telling someone who's passionate about energy production to go trade oil futures. Like the two things, trading an asset does not mean does not fulfill what you're looking for if you're passionate about that asset. But again, that's just like this Wall Street view of everything is just an asset to be traded. That makes sense to them.
And it's crypto versus Bitcoin too, in a way. I mean, like you hit the nail on the head. That's like this fascination with money. Like Bitcoiners have a true fascination with money and understanding and rooting down to the core, trying not to put band-aids on bullet holes and trying to actually get the bullet out. And that's what Bitcoiners do. And I truly think that to my core. And in everyone else, like crypto world or Wall Street, they're just like trading. I'm trying to make more fiat, right? Like just trading. They're never asking like, hey, what's the actual thing that could give us all mass abundance and never have to worry about trying to be a day trader and a weekend trader and like a trader at night and do all this crazy stuff 24/7. So that's a great point. Like that is the crux of everything I think we all do, quite honestly.
For sure. So that was like another way I saw myself not aligning with the kind of consensus view of Wall Street. Another one, as kind of time went on, I would say like 2018, 2019, there were more firms popping up. Like, you know, BlockFi made a big name for itself at one point. But then you looked into some of these firms and they were just like, yeah, we'll let everyone, you know, trade every token under the sun. If there's demand for it, like we'll, you know, satisfy that demand. And we're going to be agnostic. We're going to quote unquote, let the market decide. And again, it was hard for me to go to any of those types of firms or even be attracted to them, because I came at it from the economics and sound money angle. So for me, it was like, this is about money. There's not supposed to be 1,000 of these tokens. Arguably, there's not supposed to be even two of them. This is about money. We're trying to, and you said it very well. We're trying to simplify the process of money. We're trying to make it so that people who have a day job don't have to be a portfolio manager and an investor on the nights and weekends. That's what this is about. So for any firm that was like, yeah, we're going to try to spread, these 1,000 new digital tokens throughout the economy, I was just like, that's not what I'm here for. So it took a while to find a firm like Swan that I was aligned with. And maybe one other comment I'll just make that was a light bulb moment for me at some point, because I think this applies to a lot of Bitcoiners, is the idea of gold versus Bitcoin. And I was into gold first. So I had to kind of swallow the very tough pill that gold was not going to be an answer to our problems. And this is another long rabbit hole we could get into another time, but I'll just say quickly for now, it's and Saifedean and his books were huge for me to finally appreciate this. But gold was an asset that ultimately failed at being global money. And again, very tough pill for me to swallow. It took me years to actually come around to admitting that. But that was something over the course of, somewhere between 2016 to 2019, I fully started to appreciate that gold just cannot be the dominant form of money in an economy where goods and services are traded instantly across countries, across the internet. So that was another light bulb moment for me. But then lastly, I'll just say, ending up at Swan, again, it was a firm that was kind of aligned with my views on Bitcoin and on money. Met some of the people at Swan. They have very impressive backgrounds, come from a variety of different careers, whether it's like tech focused, traditional finance focused, marketing focused. Corey's kind of, been in multiple different industries. So I just kind of saw it and I was like, this seems way more legit than I was even expecting, to be honest with you. I thought as a Bitcoin only company that it would be like a little more informal and immature compared to like a Goldman Sachs. But then as I met more people at Swan, I was like, all these people I'm meeting are high performing, very successful in their past careers people. So that just kind of made sense. And then I don't really like where the large asset managers are going, and that's where I worked. So you put those two things together. I didn't really like the future of my current job, and then I was just getting more excited about what Swan was building, and that's how I ended up there.
Yeah, and you can tell. I mean, again, not to we're not here to toot Swan's horn, but again, like every person I've ever come across, again, is very humble. There's not a lot of hubris, and I think that's quite honestly, again, a trait of a Bitcoiner, because again, we said this earlier, but there are layers to Bitcoiners, and everyone, so many people have this connotation of like, oh, you think you're a genius, and like, oh, they said this wrong outlook of what Bitcoiners. Like, Bitcoiners have gone through this gauntlet. Like, there's a reason that we ended up here. It's not because we're like, oh, we think it's going to 10 million a coin or something like that. That's not the reason. Price is the least interesting aspect of Bitcoin, and true Bitcoiners understand that. You have to get through this gauntlet in order to, it's like buds. I was saying this to someone the other day. It's like going through, SEAL training, Hell Week. And you've got to get through it. And that's what brings everyone together and galvanizes everyone together. Everyone has to go through that breach, through that same doorway. Every Bitcoiner goes through the same doorway and have to enter that breach the same exact way. Like, that's the only way, is to kind of get your face kicked in, study, go through these different things. Like you said, gold, lower your hubris, and you're like, wow, yeah, that was wrong. Like, that was, because I came, I mean, our stories are so similar, where it's like, wow, I was doing real estate while you were doing Wall Street. Other than that, our stories are very similar, going through gold, realizing, so very interesting. I know we have a couple minutes left here, so we're going to save some of these other things for, part 2 and 3 and stuff like that. But what do you look at each day? Actually, really quick, No, actually, we're going to save CBDC. We're at CBDC and stuff like that. Maybe part 2, 3. We'll talk about some of the states banning, or knowingly or unknowingly banning Bitcoin, and then getting into opening doorways for CBDC. So we'll do that, and then in the next week or two here, we'll get into some of that stuff as we kind of see more of what's going on. That again, that just came out, and a really big thing that I think Bitcoiners are just starting to digest. So as we dive into that a little bit more, we can talk about that. And so a couple of quick ones here to finish off. What do you look at each day? So we talked about a lot of, again, this layering of your education, everything experience that lead you to Bitcoin. What do you look at now each day? Like, what are the things you're learning from each day and looking at, like books you're reading, or books you've read recently? You talked about Safe Dean's book a few years ago, obviously. And what are you like? What does John get up and do kind of every day that you're kind of like, hey, these are my must do each day, where I'm kind of continuing my learning and that type of thing. What does that look like for you?
Yeah, love that question. It is a mix of I try to always mix like being in touch with topical stuff, like short term, what's going on in the markets. I think it's important to focus on that stuff, but it can't be your whole focus, because you don't want to get bogged down in like, oh my gosh, the Fed said this about interest rates, and you end up missing the forest for the trees. But at the same time, I don't think you can ignore it entirely, because you want to know what's going on in the broader world of markets. These things obviously affect Bitcoin. Bitcoin is affected by Fed policy, by fiscal policy, by what other assets are doing. So, being a follower of markets, which I had been for 13 years at Goldman, that kind of continued, but it does affect Bitcoin. So I try to follow like the topical stuff. It's just like following markets, but
Yeah, like my big three, and again, really quick, share these. Like, I'm always looking at the 10-year, the DXY, and like the price of oil. Like those are like my big three. Do you have like any indicators or things you're just like, hey, I just kind of glance at those every day?
out of habit, like just, being at Goldman, when I had a Bloomberg and you have access to all this, sophisticated data, it was always on a
Mhm.
screen right in front of me. I don't have Bloomberg anymore, but obviously all that data is still publicly available. So it's not as fancy when I look at it, but yeah, like out of habit, I check that stuff every day, probably multiple times a day. Because it is interesting. It helps you, like they're pieces of a puzzle that kind of tell you what the market is thinking at this point in time and maybe where it's headed. So yeah, that's stuff that I always will be looking at on a regular basis. But I think it's important to not, that can't be the only thing you look at, because you end up getting lost. You're just like, you're too zoomed in. You have to zoom
Too
out.
micro.
Exactly.
Yeah.
Exactly.
What are some of the, like you said, you already said Safe Dean's book and stuff like that. So in the macro, what are you like? What are some of your favorites? Like, get into like philosophy, history, monetary history. Like, what are you doing to kind of keep well rounded in the macro?
Yeah, I'd say there's kind of like, maybe this is somewhere in the middle of like the zoomed in versus zoomed out, but like people like Lynn Alden, I think she is one of the best out there. I'm not exaggerating when I say I spent 13 years on Wall Street. I had access to Goldman's research, had access to research from other shops across Wall Street. And I think Lynn Alden's research is more clear and insightful than any other research that I saw when I was at Goldman. So she's fantastic. I think James Lavish does a great job as well too, in his newsletter, which I think a bunch
Yeah,
of it
newsletter.
is free. Yeah,
The
he's
informationist,
fantastic.
right? Yep.
Informationist is really
Yep.
good. Safety's books are really fantastic. There's probably some people I'm forgetting, but I think all of them do an excellent job. And then kind of on the other side of zooming out, there's some books that might be more about economics. There's a book called Paper Money Collapse with some sort of subtitle that I'm going through right now, but it's like totally up Bitcoiner's alley, and it's not one that you hear talked about as much. And then there is another book, which the title is Crypto, but it's crypto as in cryptography. And it's written by a guy named Stephen Levy. And I'm probably like a third of the way through it. Sam Callahan on the Swan side recommended it to me. And it's just really good, because without cryptography, without public-private key cryptography, Bitcoin isn't what Bitcoin is. So as someone who I spend most of my time on the economic side of things, I'm trying to build my knowledge in the tech side a little bit. I'm never going to be like the Jan Pritzker. He's the chief technology officer, co-founder of Swan. I'm never going to get to that level, right? He's been studying this stuff since he was a kid, but I'm going to try to get a little bit better so that I have some game in the technology side of Bitcoin and like the fundamentals of how cryptography works. So that stuff is fascinating to me. So yeah, always trying to do a mix of like, what's the newest market macro data with like, let's zoom out a little bit and try to learn about what's going on and like the underpinnings of Bitcoin as well.
Cool. Yeah, I know we have 30 seconds here, a minute. What does you, and again, we'll save a bunch of this, like a bunch, rearrange a bunch of my notes so we could go into more of these as we go throughout this series here. In your view, in 30 seconds, 30-second, I guess, summation, why does Bitcoin win in your summation, and where can people find you?
I love that parting question for part one here. Why does Bitcoin win? I think because of its design, and I will give the quote of there's nothing more powerful than a technology whose time has come, something like that. It's designed to be resistant to nearly all of the threats that could come. And I would just compare this to the Protestant Reformation, believe it or not. I put out a tweet at some point. I was like, the Catholic Church did not want the printing press to remove their power over people and their power over knowledge and information, but it happened. They did not want that to happen, but it happened. So I think that's another part in the series. Yes. Turd de Meester, shout out to him. The Bitcoin Reformation, really good piece. But that's like the succinct answer of why I think Bitcoin wins is because of its design. And cool. People can find me John_@_Swan on Twitter, John at Swan. Now that I'm not on Wall Street anymore, I tweet. Tweeting is not a big thing when you're on Wall Street, so that was kind of a relief to actually be able to tweet something when I left.
Crazy. Nostr?
I'm not on there yet. I'm embarrassed to say. I should be on there soon.
I've been learning it. Yeah, I've been learning the last couple of weeks. We'll all get there. Cool. Well, I will link that stuff below. I appreciate this part one, John, so much. And I think it's gonna be a long series. There's so many things that you and I connect with. I think, what does Kiyosaki say? It's like, because you believe what I believe, I know you're right. So something like that. I'm kind of paraphrasing, but I'll also link in your article, which is everyone has to read, is why a fixed supply of money does not lead to economic catastrophe, and we will get into that in probably the next part or two. So incredible article. Everyone has to learn. High school or college people should be studying that. So I appreciate you coming on for part one here, brother.
Thanks, Brandon. It's awesome. And yeah, we have a lot more to get into, so you and I could talk all day long. So looking forward to future series.
And we will. Thanks, John.
All right. Thanks, man.
How was that playable character for you? I really hope that you enjoyed this show in part one of John Haar's series here. And we're going to find many more playable characters in the future. There's not a whole lot out there, but as soon as we find the next one, we'll have it for you and share their story and what they are doing to change the world. John's series is going to span numerous episodes here. We're going to have the commodity money versus credit and what's going to be happening in that world, and John's written some amazing articles with that, which we'll share here as well, but we're going to be diving into that more in detail, probably in part 2. Part 3, we will be talking a little more about Wall Street and not even understanding money. They don't even understand what the definition of money is. John, no better person to talk to than John, working there for over a decade, the General Education Board, the Rockefellers, in nutrition, and how the complex is set to really give psychological operations out and not obfuscate reality. And then we'll talk about CBDCs and what governments are going to be doing. So that will be another episode. And then maybe one of the last episodes we'll be hitting, at least for the time being, will be Bitcoin and the Catholic Church, the Protestant Reformation, and diving into that. So look for those episodes in the future. I appreciate you tuning in. Please share the signal within the noise, because the algorithm hates truth. And the faster we can share out truth and educate people. Alvin Toffler said the people that will be successful in the future will be the ones who can learn, unlearn, and then relearn. And the faster we can do that, the less pain we selfishly have to suffer, and the more change we can affect. So I appreciate you, and I look forward to seeing you on the next one.